What's going on, everyone? Welcome to another video lesson. Today we're going to be talking about basic stock fundamental terminology. This section isn't to go over every single little detail about fundamental analysis when it comes to stocks. It is strictly for terminology's sake. A lot of times I run into many traders who have no idea what they're talking about or what things mean. Also, towards the end, I will be giving free websites that I think you all should look into when you want to do fundamental analysis. This one website I guarantee most of you have never heard of. And let's dive in. Also, so at the bottom left, you'll see a picture of Apple Inc. And this is a snapshot from Yahoo Finance. And we're going to go down the list from previous close all the way to the first year's target and go over each of these terms because these are the most common terms that you will hear if you're talking about stocks with someone. So previous close, that's yesterday's closing price of the asset. In this case, it's Apple. The opening is today's opening price of the asset. In this case, it would be Apple. The bid, where you see it says 133 by '08 times 1400. That's not necessarily important to know. What is important to know is what is a bid. It's an offer made by an investor, trader, or dealer in an effort to buy a security, commodity, or currency. And a bid stipulates the price the potential buyer is willing to pay, as well as the quantity they want to purchase. The ask is the price a seller is willing to accept for a security, which is often referred to as the offer price. Along with the price, the ask quote might also stipulate the amount of the security available to be sold at a stated price. You'll also see days range. This is the high and the low of the day in question. 52-week range, that's the high and the low over the last 52 weeks, and that's because people find it interesting to know the high and the low of the year. Volume is just how much volume was traded today. So volume essentially is how many trades have gone off. So in the example here for Apple, 93 million trades, buys and sells, have gone off in the stock today. And volume for most traders is important to know. I would say volume is highly dependent on your strategy. For example, most of my strategies don't include volume unless I want to do an intraday strategy, but a lot of people believe volume is predictive of things. It's not, and volume doesn't tell you how much volume was on the buy side and how much volume was on the sell side. And most financial websites will not give that away either. The average volume is the mean of the volume over N days. So this could be the average volume of the last 21 days, the average volume of the last 30 days. You have to check with the financial website of how they calculate this, because sometimes in the past I've had people say, well, I look up average volume on Yahoo, but then I go to another website and it's different, and it's probably because the calculation is different. Market capitalization, very important to understand, especially for all of you stock traders and want to be penny stock traders / day traders, because market capitalization factors into a model that you create or a strategy that you create, because every market cap actually trades slightly different from other market caps, especially when we talk about the penny stock world. So market capitalization refers to the total dollar market value of a company's outstanding shares of a stock. It's commonly referred to as market cap. It is calculated by multiplying the total number of a company's outstanding shares by the current market price of one share. So for example, if a company with 10 million shares is selling for $100 each, they would have a market cap of 1 billion. And the investing community uses this figure to determine a company's size, as opposed to using sales or total asset figures. So in an acquisition, which in stocks, if someone wants to acquire a company, they often look at market capitalization, and a market cap is used to determine whether a takeover candidate represents a good value or not to the acquired. Another term you need to be familiar with is beta. Beta is a measurement of market risk or volatility, and it indicates how much the price of a stock tends to fluctuate up and down compared to other stocks. In most stock cases, beta is measured against the indexes. So PE ratio is another thing that a lot of people talk about. It's It's used by investors and analysts to determine the relative value of a company's shares in an apples to apples comparison. It can also be used to compare a company against its own historical record or to compare aggregate markets against one another or over time. So in general though, a high PE suggests that investors are expecting higher earnings growth in the future compared to companies with a lower PE. A low PE can indicate either that a company may currently be undervalued or that the company is doing exceptionally well relative to its past trends. And when a company has no earnings or is posting losses, in both cases the PE will always be expressed as NA, not applicable. EPS, 12-month trailing, is earnings per share. EPS is something a lot of people talk about too, and it's calculated as the company's profit divided by its outstanding shares of its common stock, and the resulting number serves as an indicator for the company's profitability. Earnings dates, so for in our example, earnings date is April 28th of 2021. Companies generally release earnings every quarter, hence why we have Q1, Q2, Q3, Q4, and this tells you when the next release of the company's financial statements will be. So I know on April 28th, Apple's coming out with their earnings. I expect them to release their numbers, how much money they made, blah, 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 blah. Do an earnings call. A lot of times you can listen to those online, usually for free. If you're into that, maybe you pick up the little pieces. I know tons of investors that have done that in the past where they listen to these conference calls and they extrapolate like, yeah, this company's doing well, or they're totally full of shit. Sometimes it's worth it. Most of the time it's not worth it, in my opinion. Or train a machine to listen to the conversation or some kind of text document that goes in a machine and then it determines this is positive or negative. Forward dividend and yield. Forward dividend yield is an estimation of a year's dividend expressed as a percentage of the current stock price. The year's projected dividend is measured by taking a stock's most recent actual dividend payment and annualizing it. The forward dividend yield is calculated by dividing a year's worth of future dividend payment by a stock's current share price. So for example, if a company pays a Q1 dividend of 25 cents and you assume the company's dividend will be consistent, the firm will be expected to pay $1 in dividends over the course of the year. So if I held 1,000 shares of that company and it's going out at a quarter, then I expect that I get paid by the company for 25 cents on every share that I own. And this is a dividend strategy. A lot of people hold dividend stocks because what they'll do is they'll hold it. The company pays them out, then they reinvest the dividends, and then the next cycle they have more shares and then they get paid out. So they're basically being paid to hold the stock. But that can be risky because if the stock plummets, well, now that dividend probably isn't going to pay for your losses at that point. And then ex-dividend date is the date where you must be holding the stock by that time. So it was February 05 of 2021. And so when the dividend payment comes out, like I needed to have at least my shares in before that. If you do it after, you're not going to see dividends until the next cycle. And now let's talk about some free resources. So I'm going to pull this in over here. I'm going to enlarge this. So the first one I want to talk about is the one that I mentioned before. It's called Guru Focus. And I pulled up GME. It's completely free. They have a paid version, of course. Everything has paid versions. And you can go through 30 years of financials. Guru trades. This is insider trading, analysis, DCF, interactive charts, dividends, insiders, ownership, data. And if you don't know what like cash to debt ratio is, you just click on it and it tells you how they calculate it. All right. And you can go down all of these valuations. If you are into fundamental analysis, this has to be something that you have or use. Another one, Federal Reserve. If you are a stock trader, you must know what the Fed is doing. End of story. Okay, this has all their stuff that they do, financial stability. That's something you should look into when they're going to report what they're reporting on, what's happening in the Federal Reserve that's not talked about on the news. They also have all this data that you can look through too. And another one to get this data from is something like Fred. So Fred, if you know how to use Python, has a connection where you just type in like their little code and you can pull the data in and then you can use it in a strategy. You can make things around that. It's an amazing tool. This is where you can even download the data if you don't know how to use Python, which I highly recommend you guys learn to program in some language, preferably Python is an easy one to start off with. But Fred is free and it's all massive economic data that goes all the way back to like the 1980s, 1970s sometimes, and something you should definitely look at. And then another site is called currentmarketvaluation.com. Go to an overview. It gives you all these indicators. It tells tells you, is the market overvalued, undervalued, and this is also a great source and it's free. So check these things out. That's going to do it for me. If you have any questions, leave them in the comments and I'll catch you guys in the next video. Peace. What's going on, everyone? Thank you for watching this video. If you like this video, please click subscribe and hit the bell notification. Remember, it's not enough just to subscribe anymore. For some fangled reason, YouTube makes you click 2 buttons. That's not my fault, okay? So you have to click subscribe, and then if you want to get notified on new videos, you have to turn on the bell notification.